Hello, and welcome to the next episode of Getting Rich. I'm really excited about this week's episode because I get to answer a few client questions that have come in the past week, and that's been my goal all along, to make this a dialogue with you. So the first question comes in from Mike. He says, given the massive U.S. government debt and not remote possibility of gold confiscation in the coming years, how safe are our gold and silver investments that we purchased through ASI PM Direct and stored overseas using ASI PM Direct storage? He further asked, what do you think is the future possibility that ASI will be forced to disclose customer gold holdings to the U.S. government, or for that matter, any other gold storage business? Well, Mike, I disagree with you. I do not think that confiscation is not remote. I do think it's remote. The reason for that is gold is no longer convertible to US dollars and vice versa. Now, I can't rule out the possibility of confiscation because it has happened. In 1933, the government confiscated your gold. And what they did back then is they collected it all. Then they revalued gold at an official price higher than what it was, in effect, devaluing the US dollar. That is no longer the case. Since Nixon closed the gold window in 1971, that's not even a possibility. And the market, in the big picture, is very tiny. I don't think there's that much concern about your gold. I think a lot of rare coin or numismatic dealers will use fear of confiscation to get you to buy high premium items when you really should be buying bullion for your core holdings. But I really see that as a limited amount of interest from the U.S. government, and I don't think they're going to start asking all the storage facilities and ASI and other dealers who's got gold and where is it. It's just not that important to them. I have another question here from Miles. He says, if someone had $100 million to invest who is believing the dollar will fail very soon, what would you tell her to invest in, and how much gold and silver would be appropriate in this scenario? Well, first off, say I am not an asset manager, I am not an investment advisor, but I am a human being and I have an opinion, and I'll share that with you. I'm a firm believer that no matter what amount of money you have, $10,000 or $100 million, that you should protect it with 10% in gold. It is your wealth insurance, okay? You wouldn't buy a home without homeowner's insurance. You wouldn't buy a car without auto insurance. You wouldn't go around just because you're healthy and let your health insurance lag if you could help it. Why would you not protect the money that you had worked so hard for your future? Okay, so I believe 100% in owning wealth insurance, 10% in gold. In this environment, we're at the beginning of a bull market, and they tend to be significant in terms of returns over about a 10-year period of time historically. I like an additional 10 to 15% mixed with gold, silver, platinum, and palladium. Depending on what your goals and objectives are, you can change that mix to suit your needs. But I do think they all have a role, and I think your best profit potential with all of them is probably silver. On that note, gold and silver have recovered over the past couple weeks from Thanksgiving, pretty much everything that they lost Thanksgiving week. And not to be forgotten is platinum. It started the year down, lagging all the other precious metals. In the past couple months, it's up about 25%, showing signs of life, over $1,000 an ounce, and last week it hit a 4-year high. In terms of the dollar's in trouble. And I do suggest taking some of your wealth out of dollars at this point. It's down below 91 on the dollar index. 95 is bear territory. We're well below that, and we've dropped almost 6% this year. So I do think you want to get some of that money out of dollars and into real assets like gold, silver, platinum, and palladium. I'd like to finish off by encouraging everyone to like us, subscribe, and leave your comments in the fields below so we can continue to make this a two-way dialogue. And don't forget, getting rich always starts with keeping what's yours.